All right. Okay, guys, welcome to the live stream. We'll just give it a couple minutes, let a few people join in. I just thought it'd be easier to do a live stream today after the market close. I was going to put out a video, but I didn't feel like making the video, to be honest. I just figured it's easier just to fire up the live stream. So that's what we're going to do. And I'm just going to give it a couple minutes to let a couple people trickle in, and then we'll go ahead and get started. Most people probably aren't expecting me to do a live stream right now, and I've only given people 5 minutes notice. So let's just give it a couple minutes, and then we're going to talk about the price action today, the technicals that I see in the charts, and we'll just go through what's changed, if anything has changed, and look at the bigger picture, because again, we're in a correction, right? I mean, the markets are in a correction. The Nasdaq Futures, I believe, hit. Let's look at those real quick. The Nasdaq Futures were down from the highs to the lows, 20%. All right, at the gap down today, down 20%. So that's official bear market. Basically, is 20%. Now they popped it today, so we didn't close down into a bear market, but. And again, 20% it's arbitrary. It doesn't mean anything, you know. I mean, you can be in a bear market and you just really want to judge it based on the price action and other things, not just 20% down, but that's kind of the old Wall Street adage. And so when we're in a correction like we have been, we're going to get volatility going on. So there's going to be a lot of big drops and big rips. That's just the nature of corrections is, and as we roll out, let me go back to we'll go to the SPY here, and I'll just show you guys kind of the nature of that. Back in, even in COVID, right? If you look at COVID, you had really big drops from high to low, and, sorry, you need the right tool. That was a 16% drop, basically, from the high to there, and then the bounce from the low all the way up was 10%, and then so you get big moves, and even within that, look at this big candle right there. You basically, that's a move of 9%. So that's basically within the range of kind of that price action that we saw today with the gap down and then rally up. So today's move, if you look at the SPY, was, sorry, got to roll all the way back over there. That was a move of about, well, in the SPY it was less. Qs it was more, but in the SPY we're looking at about 4%. And then in the Qs it was, I think it was about 7.5 or so. Yeah, well, about 7.5. But again, the Qs has sold off a lot more than the SPY. It moves more, so that's to be expected. Okay, so looking at what just happened today, we gapped down, and one thing I really want to point out, guys, the market doesn't care about the Russia news unless some other things happen out of this. They just don't care, and I talked about that in a videos of my past videos. I said, look, the market cares about the Fed and the free and easy money and whether that stays or goes away. Okay, that's what the market cares about. It's about these inflation readings, interest rates. It's not about this. This is just a sideshow headline. The market was jumping around on it. Again, I talked about how, Russia annexed Crimea years ago, and the market never cared about that. They don't care about this. So at the end of the day, to see the market gap down on this news, it was pretty much expected that we're going to get some sort of a counter trend rally. And also, if you think about it, to gap down on this news, you're going to suck in the headline watchers, which is retail traders basically, that are watching CNBC and seeing that, and then they're seeing the market gap down and they're panicking. That's who you're going to suck in on these kinds of headlines. And so they might just exit their positions thinking, we're going to go into war or whatever. And or they might short if they want to short now, they decide to short. All right, so we decided to short, like on this channel, I just shorted right here, January 4th. And then if you remember, we sold it all the way down to here, covered the short right here at this first level, 342. Okay, so pay attention to that level. I've got it circled down there, and I had it circled in the past. We then rallied, and I actually flipped long for this, caught a little bit of the bounce on the long side. But then on this day, and go back and watch this video if you need a refresher, on February 2nd, I talked about how I really thought we were likely that this is basically the end of the bounce. All right, I said I don't think the market's going to go any higher than right here, and if it does, then we'll stop out. That's what I said. And so I reshorted. I added, went extremely heavy on my shorts right into there, bouncing at that resistance. And again, that was a pop right above the 200-day moving average, and then the very next day, right back down. Okay, so that was our high, and we've then been selling off. All right, so the point that I'm trying to make is disregard the headlines. All right, we'll just let the charts be our guide. And basically, we're downtrending. Okay, we did have a counter trend rally today, pretty impulsive rally, but a couple things. One, here's that level before. This is where we held support before on the Qs, and it's about 342.50. All right, that's the level I've had marked out for a while, and I'm not I get that level from, right back here. You can see we had some resistance there, and then it was some, a little reaction right in there. So as we were coming down, that was a logical place to get our first bounce, and we did. We got our first bounce. All right, so we have a reaction, and as you see, where did we rally to? We rallied right up into that area, didn't break above it, still below it. So technically nothing really changed, even though it felt like something changed. I did not cover my shorts. I did lighten up intraday. I did a little bit where I lightened up and saw that it was rallying, and then I just took it home the rest of the day. But for the most part, still, I went home with the same short positions that I had when I opened the day. All right, because I'm not playing for the day-to-day move. I'm not a day trader. I'll catch some day trades here and there. I caught one today on a little thing, but I don't. That's not what's in my videos. All right, I'm not teaching those lessons of day trading, and that stuff comes with once you get a feel for the market and you have the larger technical ability to really mark out your charts and use your levels, then you can sometimes trade around those a little bit intraday. All right, so the other thing that I want to point out is almost a bullish engulfing candle. We this candle right here, we opened low and almost closed higher, but no dice. All right, not a bullish engulfing candle. So if we closed way up here, that would have been a bullish engulfing on the Qs. We didn't get that. So those candlesticks can be reversal patterns, and that would be something to look for. But we didn't get it. So I don't see any indication that the up or the downtrend is over. I see lower highs and lower lows, and I see, a bounce today. The only thing that I want to point out, I just got to make sure that we're looking at it at least, is we did have bullish divergence. So here it is right here on the triple Qs. There it is on the RSI, and the PPO, we don't quite have it confirmed. As I zoom in, these aren't pointing up yet. It's not fully confirmed. If you want to confirm that, you want to see these lines start to point up and then eventually do a crossover, like a bullish crossover. So it looks something like that. We don't have that yet. So not confirmed, but we do have it there. And on the RSI, you do have the bullish divergence there. So that was a divergent low. We dropped down, made a new lower price, and it was a divergent low. So we got a rally. But it doesn't tell me that, this chart doesn't tell me that the downtrend's over. Okay, that's what I'm trying to get at. I've got this line marked out. It's not my favorite right here, but it's kind of the downtrend somewhere right in here. So maybe we rally up and hit that trend line, but again, I don't see any signs that the downtrend's over. Then if I roll out and look at, well, and the other thing to notice is the if you look at the bull flag that we put in, I think it shows up on the weekly. Yeah, kind of. More like on the daily. Sorry, guys. I deleted that flag from earlier in the day because it did play out, but we did get that flag pull action. Let me grab the right tool. You know, we got the flag, and then we kind of flagged out right here like that, and then we, you know, continued that flag. So that flag played out. So now we, you know, maybe we build another pattern. Maybe we're going to just consolidate for a little while, kind of grind around in here and then break. I don't know, but I just don't see any indication that the downtrend is finished. All right, so we'll keep an eye on that. That might change, and we'll have to change our positions if it does change. But all right, on the SPY. So again, we are in a downtrend. Doesn't mean it's a long-term downtrend. This might just be a correction within an ongoing bull trend. But I don't think so, because here's the thing. If I look at the weekly chart, all right, my trend line coming off 2009, and I mark out all these little weekly tags, and look, it just, you know, I had this trend line marked way back here, and I just extended it way out here, and the future, as these candles developed, here's the COVID, it rallied right up to my trend line, and that's where I said, okay, I'm going to get short right here, and boom, you get a big COVID drop. Then it rallied. Now, you know, you can see as we recover that trend line, each week has just tagged that, and I've had this trend line, you know, for years, basically. So it's a valid trend line. Lots of people are looking at it. We have a sell signal. Just trying to paint the bigger picture so that you guys don't get lost in the day-to-day and the 1 minute chart. I know on days like today, if you're swing trading, things don't fall. They don't go straight down. All right. So you're going to have days like these that shake you out if you're not keeping an eye on the bigger picture. All right. That's a sell signal right there. Big weekly drop, followed by a flag and then a continuation. All right, now when I go to the daily chart, you'll see that basically this area here where we started our flag, this is where we had, you know, this is our first target. We really started to hit that and hold right in this area. And I don't, you know, if I extend that out, we probably got some support lines right in there. All right, let's get rid of this one. Don't need that one. But where did we rally to today? We just rallied up to the top of that range. So as far as I can tell, we don't have a bullish engulfing candle. We just rallied into resistance, which is right up in here. Okay, that was former support there. Into resistance, and that's it. You know, so right now, we've got this range. You know, bottom of the range is down here at about 410. Top of the range is about 430. I suspect we're going to chop around in here for a little while. All right. I don't see anything technically changed right now. We do have bullish divergence. All right, I want to point that out on the RSI. There it is. So that was a divergent low. And we, you know, have bullish divergence, but it's not confirmed on the PPO. So it's kind of the same as the triple Qs. Bullish divergence is not a reason or an indication that the trend is just instantly over. And oftentimes when divergence shows up, it builds for a while. Just the same as the negative divergence, like right here. Okay, this was our negative divergence. See how I had a divergent high here. There's another one right there. There's a couple right there. So we had divergence that was building, and it built for a while. So the bullish divergence just starting to show up here on the RSI doesn't mean that this downtrend's over. And in fact, it could, you know, what I'm trying to say is I think we're probably heading lower, and maybe we'll just continue to build this bullish divergence and head lower. So I'm looking for more downside. 400 right here, I think, is a viable target. And then, yeah, I don't know about that one way down there for right now, but we'll see. You know, we just have to play it day by day. And then Qs, the target still remains for right now. It's about that one right there at about 298, 300. We start to sell off, and this is where I think we're heading in the near future. We get down into here, that's likely where we're probably going to see a meaningful bounce. And if this is a bear market, again, bear markets, this COVID crash right here, That's not the norm, all right? Markets don't typically crash. And a bear market is not going to do this, all right? And that's one of the reasons why this just bounced right back off. Bear markets, you know, they look more like, I have to show you, you know, it's been a while since we've had a bear market, obviously, but look, they look more like this, all right? You make your first leg down, then you get a nice counter trend bounce, then you make maybe another leg. Eventually, they do this, but this is typically the end of the bear market, all right? So I'm looking, where I think we're at right now is we're either, you know, in, you know, we're probably right about here, you know, we're about to maybe make another leg down, and then we're going to get that meaningful rally. So that's why I have those lower targets pointed out, and then I'm looking for probably a meaningful bear market rally. All right, again, why do I call it a bear market? Well, it comes to the SPY, all right? And again, it's just going back to here with this trend line on the weekly chart and the fact that we broke back below the bull trend right here on the sell signal. So again, if this continues to sell down, by the time it's down here, everyone's going to call it a bear market because it's going to be obvious. I don't want to, it doesn't do me any good. And that's what I see a lot of YouTube guys. They just tell you about what just happened. You know, here's what just happened. And here's, you know, they don't really use a lot of technicals to tell you where things are likely going and give you trade ideas. They just tell you what happened. Well, that doesn't do anybody any good. So I think, you know, those are the levels. I'm thinking that we're heading lower, and over time, we will have bear market rallies along the way. I just don't see it yet. All right, I don't see the rally starting right here. Okay, and then let's look at IWM. I know I've been on that one a lot lately too. This one is actually one of the cleaner charts, so I really like it for a short just because it's so clean. We had such a big topping pattern, sell signal right there on the weekly, boom. Couple weeks of a counter trend rally, and if you look at the week, this hasn't played out for its bear flag yet. I mean, look, we can just go like this. Here's your, you know, you could say something like there, and then the continuation. See, we haven't, they stepped in a little early at 188 on that weekly chart. So I think we've got another leg to go. And in reality, you could even mark the bear flag. It's really right about here. All right. And if you do that, that's going to set us up for that target right down there. So that's what I think we're doing. Okay. I think we're heading down to here. The week's not over. Again, this is just a weekly chart, and you see where we closed. We didn't even recover any, we didn't recover the flag or anything. So as impulsive as this rally was, it didn't do any technical damage to the chart. All right. It just literally was a counter trend rally. That it was a gap, it was a trap, you know, it was a bear trap for anybody that took short positions on that news that came out last night. Because again, like I said, the market doesn't care about that news. So they use that news as a way to trap some late to the party bears, and yeah, that's what it looks like to me. And then, you know, anybody who's long who hasn't gotten out, today's price action with how impulsive it was keeps them in the trade, you know, for the most part. They're not, a lot of people aren't going to exit with such bullish price action like that where prices are just ripping to the upside. They're not going to get out. They're just, you know, that keeps them foaming at the mouth bullish basically. So that's my read on what happened today. I went home short. You know, maybe I'm wrong. I don't know. After hours look like they're down a little bit, but nothing, not huge. Gold. Okay, look at gold. This is interesting too. All right. Bigger picture on gold. All right. It's always important to go back to these bigger pictures just to like step away from the crazy action of the 1 minute chart, or, you know, sometimes what I'll do is if the charts still look good and I'm like, and I don't want to get out of the trade because they're not technically broken, I'll just step away from a computer for a little bit and just let the market trade out, because it doesn't do any good to stare at, you know, something and see the losses or the gains. You know, sometimes you'll see gains and you just want to take your profit, you know, but that's not the way to trade properly. You want to make sure you're taking profit at your profit targets and not just getting emotional and taking the money because it's a certain amount. All right. So weekly chart here on gold was a bullish breakout right there. So there's your bullish breakout. Now we could pull back, all right? We could pull back to this trend line here, and that would be a buy zone. I don't know if we're going to, but we could. And if I go to the daily chart, this is the uptrend line that started since we broke out. Okay, and it shows up a little clearer on the hourly. Okay, there it is on the hourly. Clean uptrend line. Here's today's price action. They gap it way up and sell it way down. At one point in time today, they had it way down here, making it look like it was going to break, but they recovered it by the end of the day. That's bullish, all right? That shows that the buyers were just waiting to buy at support, and that's what I was doing. I was adding to some of my mining positions as we came down to this level. I looked for the mining positions that were down at some support areas, and like here's one of them, AEM, all right, on the daily. I've got a downtrend line here, this bullish falling wedge. We broke out, there's your buy signal. We came in basically closing right there at support. A little below, but again, it's too close to call it a breakdown. And you know, you can see in the after hours, it's at 52.45, so you know it's kind of above there in the after hours. So I was adding to that position. HMY, I added to that one a little bit. Same pattern for the most part. You've got this downtrend line here. This one did, you know, we didn't have as clean of a breakout, but we were above, they gapped up, came down to support, and I added a little bit to that one. So gold still looks bullish, guys. I don't see any indication of a breakdown in gold. Here's the hourly chart. I suspect we're going to continue to move higher and continue to break out in gold. I'm looking for all-time highs. And we're really, if you look at it, I mean, for the open today, we weren't even that far off. You know, 1972, the all-time highs are just right up there, another $100. So I know that it seemed like, if you think about it, when we were down in this area and buying at these support levels, it seemed like the all-time highs were a long ways away. Once you get that breakout, you get there pretty quick, and that's what we're seeing. So I suspect we'll be there relatively soon, and then, you know, we'll probably have a reaction up there. It would make sense. Well, most likely what we'll do is we'll run up, we'll consolidate, pull back, flag out, and then we're going to break higher. That's just anticipating what's going to happen, but I am thinking we are moving up, moving on up. All right, and oil, I want to point this one out. So I did take a starting short position. We'll see, maybe I'm early, I don't know. I jumped the gun on this DVN. I took a half position, and I'll add to the position. Now, if it continues to grind against me, I might just exit the position, you know, and just take a very small loss. Again, it's a half position, so nothing major. But here's oil futures, and I kind of liked what I saw today on how they gapped this thing or moved it down. So on oil futures, here's the price action for today. Let me go to the hourly chart. They ramped this thing up, all right, and then by the end of the day, sold it back down, and we're back below resistance right now. If you look at the daily chart here, there's your uptrend line there. There's your negative divergence starting to build right there. And today's price action was a divergent high. It was definitely a divergent high. Let me kind of clean that up here, where they popped it way up here, but they did that with negative divergence. Sure enough, sold back down below resistance. So this could continue to back test. You know, there's nothing that says it can't, but, you know, I don't know. I suspect we're going to hold here and move lower. So what I did is I jumped the gun on this one, took a half position, and I'll look for that to break. Whether it happens tomorrow, this week, or, you know, I don't know. But that's high risk, okay? Jumping the trade like that, it's a high risk trade. I don't teach that. You know, I usually say wait for the break of the trend line. The last couple weeks, if you've been in any of these trades with me, with these short trades or the gold miners, they've been extremely profitable, okay? So I'm playing with a little bit of house money on that one. What else is interesting? Joe, yeah, we have a sell signal here in coffee. I pointed that out. That looks like a sell signal to me. So unless they gap it right back up tomorrow and recover that trend line, you know, looks like a sell signal, and like coffee could come off a little bit. And let me see if there's anything else interesting. What kind of individual stocks would you guys like me to look at here? Leave a comment, and I'll try to go through a couple. I've got roughly 10 minutes, and then I got to drop. I know someone said they took a short in AA. Yeah, this one's been a little tricky. It's not my favorite. Some of the stocks though that I've been trading. All right, Tesla. Tesla had, you know, Tesla did recover this resistance line that I had marked out at 781. So it did recover that. Still below the 200. I don't know. Maybe we're going to just chop around with this 200 right here and then, you know, continue to go lower. I don't see a reason to just get out of a short here in Tesla. You know, this wasn't a bullish engulfing candle. It's just a counter trend bounce. So yeah, I still see lower prices there. Let's see, what else do we have? Oh, this one. I want to point out this one here, but TSM. So I've been really looking at these semiconductors because they've been relatively strong, but they're kind of the bleeding edge of tech, and I'm looking for these to sell down a little bit. So I took a position in this TSM one when it broke the 200-day right here. I didn't point it out because it's not really the sell signal that I'm looking for, but I'll point it out now and show you guys the trade setup in case we get that anytime soon. Support is clearly, where'd my line go? I had a line right there. Support's right here. I don't know where my line went, but it's right there. And I had those circled out. So clean support there. And, you know, this has a big negative divergence from all the way back here. So there's your negative divergence. It's been building. It's very similar to like IWM, where this thing's just kind of been going sideways. So this high right here was a divergent high. We made a slightly new high with negative divergence and sold right back down. And there's your support. So the trade is a break of that support, and it's about 108. All right. Get a break of that support there, and I think we're likely hitting a lot lower. I've got a target all the way down here at 60.82, so about a 50% drop in this thing. So what I did is I took a position. I was looking to add to it, but I saw this morning we were gapping right to my support level. We were slightly below it, but by the time I looked at this, we were right there at it, and so I just covered my short trade. So at this point, you know, maybe we gap fill right up back up here and then roll over, but I'm just going to wait for the 108 one. So that's the trade setup, a break of that. And, you know, Nvidia, again, this one did recover that 200-day, and I think I talked about in the morning video how I haven't seen 2 consecutive days close below the 200-day since really back when it was in a bear market in 2018. And sure enough, you know, maybe I jinxed it, but we did not get 2 consecutive days below the 200. So maybe there's some more upside on this one. I don't know. You know, we could potentially rally back up to this resistance level, or even back test the broken trend line marked out right here. All right, that's all possible. So, you know, once you get the initial break of the trend line and you kind of trade down, it gets a little less accurate as you head down because the trade has already started to work. All right, and so as you head down, late to the party shorts show up, and you know you start to more and more people pile into a short trade. The more it goes down, that it just gets more prone to a short squeeze. That's just the nature of it. So that's why I like to be early to the short and get it right when it breaks trend, and that's why I try to point it out. Or if you're trading right up into resistance, when everyone's raging at the mouth bullish, when something's ripping right into resistance, I want to short right up there at resistance, or nobody wants to short. All right, Alcoa, I don't know. You know, I am not short that thing. This just doesn't look impulsive enough to me, this breakdown here. You know, yes, you had this is a bearish engulfing candle right there, so I saw that. and it engulfed the previous 3 days. So that is a reversal candlestick. We've got some follow through selling. So it could be, I think you could short here in my opinion. You take the short at the trend line if you already took it with a stop. I really wouldn't want to let it go. I wouldn't want to let it go above that breakdown candle for sure. So about $80. Anything above there, I definitely would want to. Let me move this stupid thing. I'd want to stop out of. Give it a little room on this trend line. They might chop this thing a little bit, but that's what I would look for. And if you don't get that, maybe you want to stop out. But I would look for that. And I'd say the probability is definitely in the favor of that. The one thing that I don't like about Alcoa is, this high right here that took out the divergence. See that right there? So we have to move it up like that. So that's what I don't like about it. Maybe what this wants to do is chop around and put in slightly new highs and build a bearish divergence, then roll over. Again, it's just not my favorite. And this right here just doesn't look that impulsive as a sell signal. Okay, so that's my take on that one. Wheat's bullish. Wheat's the ag commodities are bullish, guys, except for coffee. But like corn, I saw corn ripping today. They sold it down, obviously. Basically, the opening today was faded across the board. But that's still pretty bullish for wheat. And look at that new high. See that? See, here's your former high right here, and see the new high, and it's just slightly higher. Higher price, higher momentum, uptrend, bullish. All right, so that's it. So it doesn't mean I want to buy it up here, but it just tells me that there's no indication of a reversal of trend. So I want to buy at support. At this point, support's probably, you got the gap, so it'll probably come in a gap fill and then could keep going. We'll see. The big trend line, the bull market trend line in this one is really down here. So that's really where I'd rather buy it, is down along support like that. Okay, that's wheat. All right, and it wasn't a reversal candle and what, Neil Dog? Like I just pointed out, we didn't have a reversal candle. All right, triple Qs, that's not a bullish engulfing. It's just a open low, trade up to resistance, not a bullish engulfing. SPY, same, you not a bullish engulfing. It's just a counter trend bounce. You get these things along the way. It doesn't look like a reversal to me. I could be wrong, of course, but who knows. BABA. All right, BABA, guys, we'll see. I like this one, but it's been tricky, and anybody who's been trying to trade this, you probably have been chopped out. I left this trade alone a while ago because it was just it was just not playing nice. This was support here, right here, and again you can see where we rallied right up to, so it's close enough. If you can recover, then maybe we get that breakout, but I like the divergence. It's got big bullish divergence, and so I like that. So in general, if I had to pick long or short on this, I would want to go long, but I just haven't seen the entry point yet. So I'm still kind of just keeping an eye on it. Maybe wait for a breakout of the downtrend line, something like that. Net was a big day. I saw that one was up like 18%. Rallied into, look, I looked at it earlier and rallied into resistance about 110.75. Okay, so look, that was former resistance, then it was support, got a little choppy through here, but where did we rally to? Basically right there. It'll probably hold this time. I bet it'll probably hold right there as resistance. The other thing is, look at the momentum. There's no real divergence. Let me just double check. See this? The RSI, it just starts moving up. Price is moving up. All right, so there's no real divergence there. So to me, it looks like a counter trend bounce. All right, I think that's going lower, and ultimately down here, 61.80. Maybe a good area to short. Basically right today. You can see it's down 2% in the after hours. We'll see what how. I don't really usually pay too much attention to the after hours, but maybe we'll sell down from here. This looks like an area to short at to me, right in there. All right, guys, just a couple more, and then I'm going to wrap up. Lyft still going to 20. Let's look. Yeah, I think Lyft is going to, well, I don't know about 20, but, maybe. 20 would be down here, so, that would be that area. I was in Lyft, what I was really looking for is this gap fill right here at 31.84. I still think you're going to get that gap fill. Look, we're downtrending, all right? Lower highs, lower lows, downtrending. This is not a reversal candle. It's literally just a bounce off support, and it's probably going to get faded. I don't know if it'll get faded tomorrow, but maybe next week. I covered Nvidia already. AMD recovered the 200-day moving average. No bullish divergence. Just momentum moving up, price moving up. All right. So the trend still looks down to me. And if I roll out and look on the weekly to get the bigger picture, this is your 2016 lows. All these tags of support, very well-defined trend line. It got a little sloppy through here, so I kind of left it alone because I didn't like that. But that's a sell signal on the weekly, big sell signal, right? Followed by another down week, you get the counter trend bounce, and this is nothing for the most part. So I suspect this gets faded and we head lower. All right, that's what the chart tells me right now. It can change, every day we get new data points, but that's what I have. Amazon, look, Amazon's a short. That's all I see in Amazon, and I talked about it. But on the weekly chart, there's the uptrend line there, topping pattern right up here, breakout to the upside above this year-long pattern that was faded, so a false breakout. That false breakout came with bearish divergence, big weekly bearish divergence. So this is a weekly chart telling you, this isn't weekly chart. When you have bearish divergence like this on the weekly chart, this doesn't mean that you're going to get a 2-week correction. This typically is going to play out for, a substantial correction or even a bear market. Okay, so this is one reason. Again, what did today do? Well, today was a pretty impulsive rally, but we couldn't even encompass the former candle, so just closed right there below. Still below that major trend. Again, I think we get faded. I think it gets faded, and not really, but again, look at the momentum, slightly moving up here. And a little divergence one day right there, but for the most part, I see lower prices over time. I can't tell you what's going to happen tomorrow. So I'll guess sometimes, and I did actually, I think I called this gap down. I said I think we're going to gap down, but it's hard to call it on a day-to-day basis. Qualcomm's nothing's changed. Again, I'm still short Qualcomm, and I don't see any change. So, doesn't mean we can't trade back up to this resistance level. We've had some reactions right up here around this 174 area. But ultimately, I think what's building on this one is the gap down. All right, I think we're going to get that island cluster top. But if we don't even get that, maybe we're going to come down here. The next major sell signal, where I'd want to sell this thing is you could either short it right up here at 174 or wait for the break of this. And if you break that, you're going to break the 200-day moving average as well. Big negative divergence telling me that we're likely heading lower. Minimum of a gap fill, but I think we're probably heading down to this area, 123, and potentially a lot lower. I don't see any change there or any reason to get out of that one. I covered gold already. And yeah, 61 in net, that would be nice. It's going to take time, and there's going to be a lot of shakeout moves along the way. So it's, let's see here. Anything else, guys, that's interesting you want me to, point out? I really just wanted to cover the broad markets and what today's price action was all about. Let's see, like PayPal, did they? I mean, yeah, these have been bombed out, so they're definitely due for a bounce. They won't move the markets, but they're definitely due. I don't really see it though. I mean, I don't see the bullish divergence on the daily. Let's look at the hourly. Yeah, definitely have some on the hourly for sure. See that right there? See that momentum? Let me grab my line tool. Moving up like that, and there it is on the RSI. Really start to show up right there. So yeah, bullish divergence there. What I would probably wait for, let me get rid of this, and we'll just do this one like that. And maybe you get that in the after hours. So that might be a buy tomorrow for a counter trend bounce. Could run up and fill this gap all the way here at 156, and that's a big move. That's a move of 46%. So might be something there on that one. We'll keep an eye on that tomorrow and see how that plays out. That might have bottomed out for sure. Guys, that's about all I can have time for today. So guys, leave me a thumbs up. Check out my course if you haven't done so. And I will catch you guys tomorrow. Good luck.